hand and click that one. If you want to ask questions, please ask when I call for them. That'd be nice. So here's what we're looking for. Basically, we want to know when to hold on to a stock, when to hold on to a market, when it's going for you, and learn when to fold and judge market strength, and when just not to trade. So who here is an investor? I'd like to know. And I think I can select a poll here. And if you are a trader of gold, do you prefer long trades or do you prefer short trades? You might be able to see this now coming up on screen. Might take a little while. Did everyone see the poll up there? Okay. Okay, so about 61% want to be, or 60, yeah, actually 64%, according to the Fibonacci, want to take long side trades. Glenn says, short or long, I'm easy. 28% look for short trades, and 8% say neither. So what we're seeing is actually around a clustering of the results around the Fibonacci area, believe it or not. 60%, 66% long trades, 63% short trades, 7% neither. So there's a strong bias as to which way people want to take trades in this market. So let's close this. We can have a look at the results. And I don't know if I can't really see the results come up. Hopefully I can see them. It's quite infuriating running these things. But yeah, 64% long side trades. That accords with the Fibonacci ratio of 61.8%, give or take. And 26% want short trades, take short trades. 10% saying that they do neither. So that comes out with a nice Fibonacci. You got it, Peter. Okay, so are you a trader? Do you manage it in SMSF? Have you ever done an Elliott wave account ever? Are you an advisor? Please write down whether an advisor or fund manager, or if you've never done an Elliott wave. What are you? I'd like to find out. Where are you at? So a little bit about me. I've banged around for a bit in the markets with foreign exchange, managing the currency exposures of Qantas, which that time had lots of exposures in yen, British pound. At Qantas, I had the absolute pleasure in 1992, before George Soros actually made a name for himself using the Deutsche Bank. About 3 weeks before, I advised Qantas at the rate of $2 per pound, $2 per pound, and at the rate of 3 Aussie dollars per pound to sell the pounds and buy the Aussie dollars. And that was at a rate of 0.33 or 0.34. Effectively, we got 3 Aussie dollars for every pound we sold forward. That was around the major low. It was also $2 US for every £1 that we sold forward. It was spectacular. George Soros had actually been selling all the way up. Anyway, and then the Bundesbank helped him. So I discovered Elliott Wave from a big loss of $10 million that I had after I had traded my exposures for us into $65 million. I lost $10 million to be net up $55 million. So I went searching for reasons around that 1988-89 period for how I could have improved the way I traded and the way I hedged the currencies. From a Qantas, I got a job with Macquarie Bank, trading the bank's money. We called it McCallery Bank or Donut Bank because we had a nice big kitchen where we could trade and trade all night and do whatever we wanted, really. And I got very fat there, and that was pretty bad for my health. I went up to a size 36 pants, which is just unbelievable for me. But McCallery Bank it was. Great place to trade. Politics and the people, some of them were great, some of them were aggressive. Generally, they were brilliant minds. And also been a fund manager, managing $4.5 billion worth of portfolio for what is now Aberdeen Asset Management. Okay, let's. I received a nice phone call from this evening, from Cindy. Thanking me for a very profitable financial year of me advising her. Now, she is a non-leveraged trader. She buys and sells shares directly, no leverage, no CFDs, and she's made $240,000. That was in April. So in 3 months, she made $240,000 trading non-leveraged. So she thanked me, and I believe she's done better than that. I've managed to pick some tops and bottoms. This was using exactly Elliott wave. We picked it to the 1 tick, selling the S&P 500. Sorry, the SPI Australian Share Price Index futures ASX 200 futures contract at 50.36. The high was 50.37, and that collapsed 16% in 45 days. Yesterday, on Monday, we bought the pound on a PHG trade, and we bought the pound for PHG members, and we bought the pound at 1.31 area. I haven't got the exact level in my mind. I will get that up, and we just saw it rally quite substantially over the last couple of days. We also bought the E-mini S&P, and we bought that on Monday morning, and I use this. Where are we? Just 1 second. These are the sort of things that I do because I know what I'm talking about in some bizarre ways. And this is what I do live for people. We bought the E-mini S&P at 1996. This is a weekly chart. At 1996, which was here, a bit more about 2005, and we took profit this morning on that position. So we made whatever that was per contract on the E-mini S&P. Whatever that was between here and there. The average was about 2,000. We got out at 68 or so. So what did we make? That's about 3.5% in 2 days. Now that's why people join the Profit Hunter group. A lot of people here just come along for the freebies. That was $3,500 per contract on an E-mini contract. Many people trade 3 or 4 E-minis at a time. The British pound, and I sit here all day and people go, oh, you just do free webinars and advertise, and I go, well, people come along with the free webinars and do pretty well. Now this is the pound. Now we bought the pound down here on this day around about 8 o'clock in the morning, just after 8 o'clock in the morning on Monday, if I was not mistaken. So let's go back and have a look at that. Computer's just guaranteed to give you the shits, isn't it? So we bought it around here where are we? 24th, yeah, it was around here. We bought it on the break up. Actually, I was on, bought it on the break up, down around 131, and we've been taking profit today. This morning, first thing really was, where was it? It's over here. Basically got out about 2.8% in a couple of days. So those are the sort of things that I try and do with my PHG members, and we certainly get them more often than not when it's really primed. So my job is to wait until we can absolutely beat up the markets. Is that something that would be useful to you? To actually have somebody that can sit there and stay, say, in the morning, we're going to go in and beat up the market and actually buy some currencies, buy some equity indexes at a time when it's extreme and everyone is scared. And we've taken profit at the moment. I think we're running still a bit on the E-mini S&P. I don't want to put up the trade tables, but if you need that, I can certainly send you those. You just have to email me. So I got a nice letter from Peter. Thank you for that, about how your son's trading. I haven't sent it out to people. I sort of didn't get around to it. Didn't have time. It was there's actually at the same time there were two fathers. One was Mr. B's father, who was trading LNG. I know you and your son Peter made a lot of money out of it. I believe he's 16. Made a lot of money out of that trade, taking profits on that. And Mr. B's dad didn't want to go in. Mr. B's dad is a big investor, and he is probably accumulating right now. So let's move on to that. That's all just a little bit of background. I've been able to pick tops in BHP and bottoms. We started shorting BHP a fair while back, actually. We've taken profit on that. Then we've reshorted BHP around the $19 area. So luckily, I've been able to train with a lot of different people, including Jake Bernstein, Larry Williams, Russell Sands, Van Tharp, Ruth Barons Roosevelt, actually, who was married into the Barons family and the Roosevelt family, though she was, I don't know how that works, but anyway, past head of APTA and vice president. So a little bit about me. I'm up in Sydney at the moment, and the water's really warm compared to Phillip Island. It's a pleasure being in 17 degrees. It's pretty cold, Phillip Island. The thing is, I'm actually quite lazy in the way that I do things, and I like to catch bigger waves, although it's getting harder as I get a bit older competing with the young fellas. When I'm fit, I like to catch the bigger waves, and I like to be out when there's not too many people out. I like about 4 or 5 people in the surf, not 20 or 30 like I had in Bronte. Fit young buggers who were there all the time. I used to live at Bronte and surf Bronte Reef all the time. It's not the best wave in the world, but it has some nice things about it. But I'm lazy, and I like big moves and the trends. I want to make sure that it's okay, but I also want to be safe as well. So I want to make sure I take off on the right wave. I choose my waves, I choose my mark, and I get the wave that suits me rather than something that I'm just going to get killed on. This was a nice barrel. It barreled right up here, and I zipped it along in there. I made it out too. So we talk about the Elliott wave, and the Elliott wave at its foundation has a thing called Fibonacci numbers in its belief system. And basically, if you think of Fibonacci numbers as a simple number progression, adding 1 and 1 and 2 to each other, and each successive number, 1 and 1, 2, 3 and 5 is 8, 8 and 13 is 21, 21 and 34 is 55, and so on and so forth. That's the way populations expand. That's the way nature tends to grow at this sort of rate. And it becomes ever increasing, faster increase of growth in terms of number. But in terms of ratio, it is constant. When it contracts, if you divide 34 into 55, you'll see that that number comes to the 61.8% ratio tendency. 21 divided by 55 tends to 38.2% retracement when you're moving back down. So there's a ratios built into the cosmos. R.N. Elliott came up with it by looking at waves when he was doing accounting for one of the US governments, and I can never remember which South American country it was. He used to sit on the beach, because I guess you have a lot of time when you do that. Came up with a thing called Nature's Law, the Secret of the Universe. It was then popularized by Robert Prechter and A.J. Frost in the 70s and 80s, and Robert Prechter has gone on to be, he's a Mensa student. So anyway, building blocks of Elliott wave. Each and every wave is part of a larger wave set. We're going to see that clearly in this next coming examples. So if you don't know what's going on in one time frame, then you look to the next time frame up or the next time frame down to give us some clarity. And we're going to need to do that tonight. Write that down. We're going to need to go for the clarity in the market here, because we're at an important juncture. So basically, hard and fast moves are what we call impulsive waves. These are trends. These are where you can buy it. Close your eyes and buy is something that I say to my PhD members. There's only certain times where we can do that. When there is certain times we can do that, it really, really works. So where a wave starts is always a moot point. You can see where a wave starts well after it has started. It's a guessing game to work out when a wave has started. It takes a little bit more evidence that most people would like. Sometimes we can guess that the wave has ended, and we might even talk about the end of the S&P move down. We might even talk about the end of the pound move down. So when the nature of buying and selling changes is when the wave starts. Here's a classical Elliott wave. First off, we get a move up with wave 1 going up, and then we get a movement down, which we called A. And we mark out the top of wave 1 as important once we can draw in wave A. Then we look for a B wave rally, little retracement. That retracement may go 50%, it may go 61.8%. Then we look for a C wave, and this is what's called a zigzag decline. And C wave, once C wave's happened, and if it's down around that 61.8% retracement, we might start to think that is wave 2. Wave 3 is a glorious thing because it's a very fast trending market where most of the time you can sit and buy, and it doesn't matter what you do, but you'll make money as long as you buy and don't buck the trend, and the market jumps strongly for it. At the top in wave 3, everyone's a trader, everyone's making money, it's easy. I might have told you that wave 2 is characterized by depression. Everyone's negative on the market. There's more negativity at the bottom of the wave C of wave 2 than there is actually on the end of the previous wave down that starts wave 1. So what we see here is wave 3. We see ABC often forms. This is a classic Elliott wave pattern. It's a stylized. Often, if you get an ABC zigzag, you'll get a complex correction that will contract an ABCDE pattern to complete wave 4. Then the market forms a bit of a triangle. It's often easy to do that. And this is the source of many trading systems. This will give you some chance at being right 70% of the time. People call me, one gentleman, Rocco, calls me Mr. 75%. He takes my advice as a platinum member of the Profit Hunter group. So he rings me all the time. What do I do here? He trades the Italian MIB. He trades the Dow. He trades the S&P. He trades the Australian market, BHP. He trades a lot. Very active trader. He's also a sophisticated investor in that category. So we see this breakout for wave 5 and wave 1. Important wave 5 should be intend to be the length of wave 1 is how you measure wave 5. So wave 5 isn't the strongest. Wave 3 is the strongest. And there tends to be some relationship between wave 1 and wave 5. So let's talk about this. We'll run through it quickly. When it breaks through the bottom of A and the start of B, you may buy this if you haven't already bought. You would buy with a stop loss below the 61.8% retracement, because on average the 61.8% retracement is what you see in wave 2s. When it breaks through the top of wave B, then you'll start to see more chances for buying. When it breaks through the top of wave 1, most people are bullish, and economists, fund managers are starting to pour in. And in wave 3, the fundamentals that the fundamentalists do, like all of those people who ridicule chartists, they're finally getting on board with the stock because they've actually worked out that it might be doing any good. The good news starts to come out in wave 3. The bad news is at the end of wave 2. So we get all this compression, A, B, C, D, E, W, E. And when we look carefully, we can see that there's confusion in wave 5. There's a party in wave 2. Sorry, a party in wave 3 at the top of wave 3. And there's deep depression and a dive in wave 2. So, is this stock? What is this market? We're going to have a look at it. Let's do up some patterns, and I'm going to do it by hand. Normally I do it stylized. That looks like some sort of wave 4 or a B wave. This looks like a triangle here. I would say that looks like A, B, C, D, E. So let's call that wave 4. Let's call that wave 5. Let's call that wave 3 of 5. Let's call that wave 4 of 5. Let's call this A, B, C, and then one more push up. So this is a fourth wave of higher degree. So let's call it an HD. I'm sorry about the colorations. We do 1, 2, 1, 2. So we have, this is a bigger 1. That's a bigger 2. So these little 1, 2, 3, 4s, they all marry up. This is a beautiful, powerful looking move. Nobody has guessed it. Okay, so let's call this wave 3 of larger move, and then we get a dip down into the fourth wave of lesser degree for a bigger wave 4, and this is wave 1, 2, 3, 4, 5. Okay. So in this chart, you have a lot of things. Okay, no more guesses. Thank you. All the colors, and I'm probably going to get rid of the blue because it's really shitty to look at. Tick, Pat. You've got it. Now let's look at guess what this one is. And in yours case, Pat, you might ask me, you might tell me what your time frame is. What time frame is that on? Okay, so let's look at this other pattern. What's going on here? I've given you some of the theory, and this is where it gets fun. Tick, Pat, 2 ticks. Look at this ABC. That's an ABC. Sorry about that. So the first thing I want to do when I look at a chart is I want to look at the corrections. Number 1. They're the ones that are going to tell you the most. So A, B, C. Notice here there's a fourth wave in the C wave down. There's a fifth wave here, and a little bit hard to peg here, but we can see that in that ABC, it's doing 3 sets. Who's heard me talk about 3 sets before? We also notice here that this is very impulsive. We also notice over here we have some confused trading pattern. We have another ABC pattern. ABC. Now this is kind of a running thing. We have here wave 1, 2, 3, 4. Sorry, I've stuffed that entirely. Apologies. Getting ahead of myself. 2, 3, 4, 5. Then we get a big ABC to the downside. Then it goes scooting to the top side. So if we're in this pattern here, this is a tight congestion, which looks like a pennant. It looks like a flag. Yes or no? It's a correction. So that's corrective in nature. And what's it doing? It's doing a complex correction. A, B, C, D, E. So which direction should this go, up or down? Which direction would you be picking this to go? Up, says Paul. Up 70%. 70% chance of going up, called Abby. Abby was at the Ultimate Forecasting and Trading course on the weekend, so he's all enlivened. I'm doing it in Bali in a couple of weeks' time. I'm also, if you've got friends in Singapore, I'll be talking to the Technical Analysts Association of Singapore next Wednesday, the 6th. Okay, so that's a correction. So most of the time you should expect it to go up. What is this? We still haven't had any winners on this particular chart. So this wasn't today, but basically I've been banging away at the XJO. Oh, that was the other thing. We bought the, on Monday, when did we do it? We also bought the XJO. We increased our self-managed super funds for investors. If hands up who's got a self-managed super fund. Actually give them, I gave them on Monday to buy and go long. Actually on Tuesday we went long, apologies. We went long the XJR. We increased our self-managed super fund allocations by 5%. I know you're a PhD member. Do you find that useful, Gordon, to know how to jump in and out of your super? So we can see the XJO, nice pullback, and basically we bought when the market opened. He says yes. We were looking to buy it down, buy dips, and get into equities, and if subsequent we've seen a good two-day rally. So thanks, good. So so I've been pretty well spot on with this. It's because I use timing and because I use Elliott wave that I do this. So I want to teach you, I can't teach you the timing, but I can teach you the Elliott wave. And most of you probably prefer to be doing it all. Who likes to do things by themselves? Raise your hands if you like to do things by yourself. Okay. And who likes to have other people help you with that? Who would need a hand with their trading? It's amazing how many good traders I have. In fact, one I just discovered has become a great trader, and I turned him around from being a losing trader from 100,000 into a million over 10 years, and apparently the numbers that I'm now told he's making are astronomical. So what I do is provide help for people who are good traders, who are beginner traders, to get better. So Here's some Tenets Elliott wave. All waves of similar degree will relate in both time and price amplitude. So you get an idea of how far things could go and what time. Now, importantly, if there's an impulse move, you should expect a correction. Some stage, you get an ebb and flow in the market, and all good things come to an end. So what are we looking for to make it easy? If you are looking to trade one type of wave, then you look to proceed to trade the preceding wave type. So if you like to trade wave 3s, you've got to look for wave 2s. If you want to work hard, not necessarily smart, you might look to see and pick the end of wave 3s to trade wave 4s in a ranging fashion. If you want to trade wave 5s and have a higher percentage chance, because write this down, wave 2s have a 40% chance of making you money. Wave 4s have a 70% chance of making you money if you pick them correctly. On the flip side, wave 3s are really powerful moves that will make you more money than you need. One of my PhD members was telling me today he bought a whole lot of soybean options and absolutely cleaned up absolutely on soybean options because it had a big powerful move, and that was a wave 3. So a full market cycle consists of a set of 5 waves labeled 1, 2, 3, 4, 5, followed by corrective waves, 3 waves, simple ABC, which is usually in wave 2 or 4. Now, corrective waves can be either 3 waves or 5 waves, and we've talked about that. Remember, we saw wave 4 was ABCDE, wave 2 or wave 4. So here's some guiding rules for impulsives. Wave 2 will only retrace part of wave 1, i.e. not all. Wave 3 should not be the shortest wave versus wave 1 and 5. You'll remember the example. Wave 4 cannot overlap wave 1 range on close. Wave 1 and 5 tend to be equal in length, and wave 5s can sometimes extend more than expected. Now just remember, wave 2 and 4 are actually corrections in an impulsive move. So let's look at this chart again. If we were to take this as wave 1 or wave A, let's call it wave 1, and measure from this low here, the same length, we would get a target for an equal wave, the same as wave 1. And wave 3 should not be the shortest wave. If it is equal, it will be more likely to be classified as wave C when wave A and C are equal. So Mike is asking, if wave 2 retraces more than wave 1, does that restart the wave count? That is, the next wave will not be a wave 3. That is correct. Wave 2 should not retrace more than 80% or 76% to be absolutely picky about it, of wave 1. What we see here is that this move up in here, we can see a clear, we can label this wave 1 or A. Now I showed you another way of labeling it previously. This is where fundamentalists, this is where anybody who wants to criticize Elliott wave says Elliott wave is shit because Elliotticians come up with different things. Now I've chosen a live example. This is the data right up to the minute, up to almost 8 o'clock this evening. So you'll see me quite often doing live stuff. That's what I do. It's scary for a lot of people, particularly who analyze markets, to go live. This is what I do all day for the Profit Hunter Group members. I'll put on live trades for them. We'll give them live trades first thing in the morning, just like I did on Monday and Tuesday. When we got the opportunity, you actually have to get into it. Any Profit Hunter members disagree with me or agree? I appreciate that. So wave A or wave 1? Did you notice I just started? Michael, close, no cigar. Oh, Abby, that was great work on the actual the expansion stuff from the forecasting course too, by the way. I really love that example. So wave 1 and 5, so wave 1 or wave A. If this is an ABC pattern, now we talk about this. Let's say if this is wave 2 or B wave, and notice wave 2 is kind of about a 50% retracement. It's kind of, you're close, Michael, you're very close, you're not quite there. But wave 2 or wave B, it's testy. Notice that we have that triangular behavior in it. So if this is a B wave, then this is C, and we get equality in waves. We see a very powerful move up, but we also see a couple of things that are suspicious. So if this is wave 4, notice here, this will be wave 4 if that's wave 3, if that's wave 1. What this will mean is this target price area here must be well and truly exceeded. If this fairly deep retracement in wave 4 happens, we get more. We've gotten a fairly deep retracement in here, and I'm a little bit 2 would be linked. So this would be wave 4 of wave 3, and we get a push up for wave 5. That's the implication. But this little top here has to be taken out. Otherwise, this market is set up for a larger decline and a failure. Now, Michael has got it. I'll give it to him. He said it's gold chart on a 30-minute basis. It's actually gold chart on an hourly basis. So real time up here, the gold market is confused. There's a few tip-offs which are giving me a sign that it's not necessarily the strongest and the sharpest tool in the shed. You'll notice that metals like gold, silver, platinum, palladium, nickel, all did better than gold over the last 24 hours or 2 days. Gold hasn't been that successful. You'll notice that the fear has gone out of the markets. Okay, so there's a lot of things we can fiddle around with, but you can see the idea. If this is on the daily charts, we can see certainly there's some beautiful things going on in terms of impulsive waves. Now, Alex is reminding us that wave 4 cannot overlap wave 2 in terms of closing prices. Alex, you'll remember that importantly, right? So we've got an overlap if this is 4. Now this, I'm not saying that's wave 4 of, I said it was wave 4 of 3, this being 3, Alex. So there's a little bit of a definitional issue. Certainly if it smacks itself below this target area here, below this level here, it's in trouble. So that's why I'm saying you don't want to see it knocked down again. The pattern is a little bit, we can't go into the pattern, that's more for something for change the chartist. So wave 2 will only retrace part of wave 1, not all. Wave 3 should not be the shortest. Wave 4 cannot overlap wave 1 range on close. Now what you were looking at there, Alex, I haven't seen your name in a webinar before, but that's cool. So wave 1 or 2, you know, we're sort of pushing it definitionally. I think if anything, this has to be wave 4 of this little wave 3. If that's this way, if that is wave 3, and then we got to get a supersonic push up in gold. Now most people will say, as you said, everyone says, well, You know, they're debasing all the currencies, so gold is the safest place. In a deflationary environment, the bonds are telling us that we're in a deflationary environment because the bonds are down the toilet. If the bonds were going up, we would be in inflationary time because investors would be wanting a premium over and above the cost of money for holding money and dealing with inflation. So this is a bizarre situation. We're in ABC. I'm tending towards ABC, but it's confirmed if it can't get above that expansion. Sorry, I'm just coughing. So let's move on. So that was COMEX Gold 9 chart. And Michael, I know you've been around for almost as long as I have, so well done. And you know your stuff. Michael was a trainer at one of Australia's biggest technical analysis supplying companies for a long time, if I remember correctly. PHG member speaks, blah, blah, blah. So corrections, the key to revenue generating for lazy traders. Basically, debate with me whether this irregular is a flat or whatever it is. I'm going to tell you here that I try to not ever really care about a couple of things. These are the ones: horizontal triangle, zigzag, a bit of a flat. I don't care about that. I don't care about that. I like this about 5% of the time. It works. These are the 70%ers. These are worth about 40%, and I have no idea of the statistics on that. I can't tell you, but I like this one for a couple of reasons. Strategically, it's a wonderful thing to use. Corrections will get the corrections right, and you'll make money. You can see here an expander, and this is the reason why I called the top in the AFR in April 2015 to the tick, and then it collapsed. That was on the day. They'd already done the chart with it collapsing a few days later. It takes the papers a while to produce something. So corrective waves have 3 waves, either 3 waves, a simple ABC, or 5 waves, and we can see all of these sort of things here. So we get a 3-wave correction. That's the sort of thing we're looking for. This is the most useful thing about Elliott wave, and most traders will, or trader teachers will teach you about a triangle. The concept is you want to see a wave 3 where everybody's bullish and excited. You could call that the property market in Sydney. And there's been people have been buying and they're dying to buy, and then something stops and they have time to correct, and then it goes sideways. Everyone gets confused, and then everyone loses interest, and then suddenly it pops out again 70% of the time. So it works about 70% of the time. Here's the nature of a 4th wave. 50% of traders will be bullish. It doesn't feel to me like we're in a 4th wave because 64% of you are only taking long trades. 50% of traders will be bearish. There will have been a fast, powerful up move, down move. It is often a triangle, which we've seen, and a 38% retracement is usual, and they are really gold. So here's what I do for profit owners. I give buy and sell signals: foreign exchange, Forex, ASX, commodities, world indices, US stocks. Most of profit owner group members are ASX investors and traders. We have some very hardcore traders who trade Forex, commodities, and indices, and they become full gold members. For people who are ASX investors and traders, brokers, advisors, and financial planners, they often become the ASX gold members. So we have 2 different categories of members who can ask me questions. I give profit targets, stop losses, and I give profit takes. So I give you timing, targets, and trades, as well as trade management. We do live speed webinars in the morning, and they're recorded so you can watch them later. I have webinar transcripts for the world indices and the ASX, and they're available for speed webinars, so you can read them and quickly research. I can't tell you how many times people come up, PHG members say, David, it's reached your target. What do I do now? And I love that, because I don't show, I get at least 3 or 4 every day. And I answer questions on any share for PHG Gold members and give trading signals called profit. We're going to talk about a little bit about this. The ASX package is 3,997 per annum. The commodities package is 2,497. The Forex package is 1997. The World Indices package is 2,497 if you buy them individually. You can get ASX package per annum for it's $347 per month, and the commodities all break up. So it's interactive, and you get to ask questions. You can choose anyone, a combination as gold or silver. Special offer tonight is normally by 7,500. Tonight, it's not. It's normally 7,500. If you've done these webinars before, I'm happy for you to pay 3,497 tonight only. You have to email that in. In fact, I've got a little bonus, a little well, not so little deduction for you. I'll send you the link. You'll get full gold RSS feed membership for that price. Who would be interested in that? And that would be tax deductible today to fit in with this year's end of financial year. We'll get on to looking at some little gold stocks, and we'll give you the coupon, and I'll give you the link to pay it at. I'll put that out for you, and that'll come through in the chat boxes. So that would need to be the application. By Friday, we'll need to have a meeting. It's an interview with me. It's a 14-day money-back guarantee, and I'll put the links and things up for you in a second once I've just found them, because I didn't think I was going to be saying that today. Boom, 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 boom. Where is it? Here we go. There's a little bit of a here is the message. You should see it coming through on chat right now. This will be good until the 30th of June finishes. So if you want to get in on that, that's cool. And I will upgrade you to the RSS feed of $7,500, which is normally $7,500. So that's the coupon 0CBB, sorry, DB8A27, and you can sign up on this link. Now let's go have a look at some stocks in the gold market. And chuck up a couple of gold stocks and we'll run through those. I'll take questions on this. It's now 9 o'clock, so if it's okay, we'll spend an extra half an hour doing that. OZL. And that's enough questions. BGS, that's interesting. Thanks, Tom. So, no more questions. So we have OZL Oz Minerals. Obviously, this has had a nice move on the daily charts, but its monthly charts are a little bit suspect. Why is it a little bit suspect? We don't know. Maybe it's the business. But you notice here, it's kind of a little bit suspect. It's been milling around. We could call this, when we drop down onto the daily charts, we can call this has a big, long, sloppy correction. Let's look on the weekly charts just to give us some guidance. See how many lines I've got on things and watch the volume. What we can see here is wave 1, 2, 3, 4, 5. Kind of an A, B, C, and it's morphing not that well. Volume this week is pretty good compared to on the breakup. So it's kind of, I'd be thinking about $5.80 on the top side and stop at 5 cents. If it blew through $6, then I'd be looking down towards $6.60. Yes, Linda, you got to join by tonight. So that's the link. Use that link that I just sent through to you there. That's got to be that code that I gave you, 07DB8A27, is only available for 30 till the 30th of June when that goes on. Okay. So OZL, it's a little bit of a cheeky one there, Leon. What do you think of it? What have you been? Why do you ask about it? Because I think Oz Minerals is not a pure gold stock. Is that right? It's not behaving quite like a pure gold stock. I might be wrong. See, you've got this Lee in one of the last legs. It's something where you don't expect too much. It's looking good at the moment, but don't, you're shooting for $6.60, gold and copper, not pure. Copper's sort of been lagging. OZL merged with Zinifex. Oh, I remember that stock. Okay, so next. We have a couple of fellas here. Gold Road. What I'm going to do here, Gold Road has been a beautiful mover. Yeah. I've just phoned a friend here because when I'm confused about something, Leon, I call a friend, and that friend is a $3,000 piece of software called L-Wave, which you can trial if you like, but it's got the same reservation it's saying that this is a wave 2 rally and it may be starting the next decline, but that's really confirmed below $4.90. So make sure you've got $4.90 just in case it does fall over. It's calling this a wave 2, an A, B, C, with close to wave equality. So just hose you down, certainly keep the trade on, but just have that trade stop loss underneath there. So Gold Road. Now, what can we say about Gold Road? We can say some things like get rid of all of the shit on the screen. Okay, we can say get rid of all the noise of the bars. Number 1. We can say Gold Road probably have a problem at 76 cents for a number of reasons. We can see 1, 2, 3. No, not good enough. Let's call that 3, 4, 5 of something. Okay, this is a bit of a triangle. It's been a bit confused in here. We'll call this 1, 2, 1, 2. So we've probably got a little bit of a dip down to 60, another little rally up, and then a potential challenge at this one. So then we've got a much larger decline back down to probably around about 30 cents. So the way this counts to me is a little bit 6 to 1, half a dozen the other. It still hasn't taken out this high back from this area here when gold was extraordinary. There'll be a lot of dead sellers up there. There'll be a lot of people up there lurking, wanting to sell, and you probably get a larger correction. At the moment, I'd go for a smaller correction on this, looking for a pullback and one more chance on the top side. Let's clear up this shit on the screen. And we can see here, best thing to do is to have a stop loss below 62 cents. You're hoping for 70 cents, a bit more of a pullback. See, here we're getting this. You'd be really suspicious if it got below 63 cents on that one, Peter. And we'll do one question here. There's about 1 million questions up here. We'll do your question. Was you had one question already answered by default. BGS. Thanks, Tom. I can never remember what BGS is called. Pyramid. What has this stock's life been like? What's it been? It's been largely breaking in a range. So here's the placement, stop loss at 20 cents. It hasn't really wanted to get, yeah, there you go. It popped above the range. I'd really want to stop loss at 20 cents. I'm inclined to believe it's churning now. You know, probably goes down to 25 cents, back up to about 33 cents, possibly up to 36 cents. So this is currently nice correction. The way it's gone deep is perfectly acceptable. The way the volume is perfectly acceptable. I'd like it if it really got near that 40 cents. I think it'll be a bit healthier. Let's blow it up into the rest. We can see here now an ABC to the downside. Notice there's a classic wave 5 pattern in there. So 1, 2, 3, 4, 5, ABC. It's dipped down in a pretty easy way. So this is a little bit more interesting. It's come down 50%. That's not a fourth wave. Okay, so let's assume this is an A wave, a B wave, up to $34, 34 cents, probably back down to 18 cents before trying higher. So at the moment, we've seen it declining. That's okay. We should expect a rally up to 34 cents, possibly 36 cents. Blowing through 38 cents starts it off higher. At the moment, let's just assume there's more pricing action going on that one. Okay, now we have a question here on SAR. Is that okay for you there? It's a little bit more difficult. It's probably, the volume's good, so I expect it to hit 34 cents. That's fine. I don't think that's a big problem, but a bit more churning is more likely. Let's look at SAR, Saracen. And on Saracen, just 1 second. Saracen, first thing I want to do is look on the weekly charts. Then Neely will have a different idea on that. So Saracen, this is clearly an impulsive wave 3. Volume is still increasing, so we still should be looking for the moon on Saracen, and I'd be happy to buy dips down to $1.24 and $1.03 with the stop loss below 87 cents on a long-term basis. On the weekly chart, what we see here is a little bit of over exuberance on the last high, which you can see there, and it's struggling. So on this time frame, I'm cautious. It may get $1.55, but cracking below $1.32 would indicate a decent correction back down to probably $1.18 or that $1.02 to 98 cents, where you can pick it up again. Now, so that's the weekly. I don't want to go down any further than on that. There is one more, which is a stellar stock as well, which Jen has been actively trading, and it's called SBM. And I'm going to have to call it a night on those ones. On that, so SBM, we've been excited about this, and it's been a little bit depressed. We can see that it's really not been as strong as it should have been. But all in all, we might see one of Dawn's even stacking signals. The best retracement is around the $2.10, where you'd be looking to pick it up if it declined there. The last little rally, not so flash. So let's look at the gold price itself, because funny things happen at night. Let's look at gold. Gold is not showing terribly bad signs. Here we go. Look at this. Wave 1, 2, 3. There's the ABC pattern. You don't want to see it below $13, up to $13.72. Now, the Australian gold stocks have been moving differently to gold price, largely because of the currency effect and the way their business are. So let's say we've got a double top, should expect a double bottom. At the moment, it's gone berserk over the last couple of days. You're probably expecting $2.71 on the downside, at least $2.85 to pick up, to drop down to. So a little bit cautious about that one for the next few days. Volume is not too disturbing on the downside, so it's probably just reach a double bottom in an uptrend, hit the prior tops, and then start its way back up again on that one. Now, we've had a couple of people begging for an analysis of MOY, and we might do one more. Now, Jack, Arc Mines, I don't know the code for, but I will do it for you. Arc Mines, this is Millennium. This is tree trading. It's been really, really textbook stuff, but not doing anything super exciting. Really, I think if you're looking to buy this, you wouldn't want to buy a break above 17 cents, stop loss below 14 cents, hope for 19 cents short, cross your fingers for 26 cents. Otherwise, simply wait for 11 cents or 12 cents. Now, the whole world loves gold stocks. Everyone in Australia has been either buying gold stocks or health stocks. At some point, that game becomes a little bit difficult. Okay, let's move on. We'll do HAK in the end. Okay, so here tonight, we did some things about Aussie gold. Trade Elliott wave well. You need to go with the flow. You need to leave your ego at the door. You don't need to forecast, really. It's about the trading and keep it with the flow. So you need to watch the corrections and hang on for the impulsive moves, and always trade with a stop loss, and understand you can have structure and trades with Elliott wave even when you're wrong. The good thing about Elliott wave is that there's at one point you absolutely know that you're wrong, and you can reverse the position and go long or go short when it's in the direction. At the moment, we've done a bit of a reversal on, we've gotten out of a trade and got in for, gone the opposite way. When you're doing Elliott waves, who here was good at doing those in their heads? Raise your hands if you can do those in your head. Okay, if you can't do it in the head, then it's helpful for me. Now, Ultimate Trading and Forecasting course, that's in Bali on the 8th and 9th of July, Nusa Dua side. And there'll be 5 people only at the course. So there's a fast action bonus for attending on that. Send me an email if you'd like to learn my timing and trading techniques. This is a high-end course. Elliott wave gives you price objectives. Fourth wave is often 38.2% of wave 3 range. Wave 5 target equals wave 4 end plus wave 1 length. Wave 2 often retraces 50%, 50 to 70% of wave 1, with a tendency on average to be 61.8%. Wave 3 is usually 1.62 times the length of wave 1 from wave 2, or 2.62. You can get time targets and good risk-reward ratios. You know where to get in, where to get out, and your price objectives. So here's have you ever gotten into a trade you shouldn't have? Who here has gotten into a trade you shouldn't have? Be honest. Have you ever been confused as to the direction of the market? Have you ever been stumped as to where to put a stop loss on? That's what I do all day for the Profit Hunter Group members. Then you should think about joining a Profit Hunter Group, even if you believe you're a very good trader. Cindy says, not anymore. Cindy, if I can talk about Cindy, Cindy was already a pretty good trader. She'd make lots of money, but she would give it all back, and that's what she said to me. Like, I'd make good money and then I'd give it back. Who here makes really good money and then gives it back? Cindy saying, awesome trader, now I'm brilliant. It's a little bit cheeky there. Who here makes some money and then gives it back? So the concept is, if you want help with your trading, then join me. And tonight you can do stuff. We saw the Elliott Wave program that's available as a trial for $80 US for a month. For software, that'll cost you about $3,000 plus about $1,000 for data. to put into it and do all that sort of thing if you want live data. Wave Trader Classic and Wave Trader 3 also help me for my Elliott Wave. Advanced Get is not really Elliott Wave. Both you can see Wave Trader Classic and Wave Trader 3 at edes.com.au software. Sorry about the tongue ties. And my PhDs always intend in do that. So where are you at in your trading is really the important thing. A lot of these stocks, we have some stocks which seriously have gotten into some great positions. We had the silver one. We also have a silver membership, which is I can offer us a discount for the end of financial year at the moment, and we'll just run through these. Blah 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 blah. Silver membership for ASX Silver, it's 2,000. Normally, it's $297 per month, or $3,564. And tonight, special offer is $2,997. You need to give payment details. Send your email to sales@edes.com.au, and we'll get that sent out to you. I'll get you the link sent out to you. So this is the coupon for gold membership, and send me a request to sales@edes.com.au if you have any questions or need anything. Your stuff will be tax deductible. So if you want a deduction today for the financial year preceding it, you've got to have it in by tonight. The offer is still valid until 5 p.m. tomorrow at $2,997. It's just you won't get the tax deduction for this year, and you'll miss out on that. And silver membership, get everything that gold members get. They see everything that gold members ask me. They see everything that gold members see as a recording of the speed webinars and the transcripts, and they get to attend the forecast webinars like the gold members do. Okay, now let's look at a couple of stocks. We're going to just quickly, I'm going to tell you about a couple of stocks that are at the end of the line in terms of uptrend, and one is DCN, just as a reward for staying on. Some people think during the ads you run away and they miss out. This has been brought to you by a station sponsor. DCN. I'd expect one more little plug, a dip down to $2.74, up to $3.05, and then a decent correction back down to about $2.33. Also fits into this category, which we talked about coming near the end of the run. NST also fits into this category, although this one is one, it's kind of like Harley Davidson. You don't want to call the end of this one. It's had 3 goes at the top, so maybe a bigger correction back down to $4.46. I would appreciate that. OGX, which is Orinoco, also nice. Notice that this is a shrapnel stock that has woken up pretty well over the last couple of weeks. Now, usually the last time, you'd expect a goosing towards 26 cents, 27 cents, that sort of area, and stop out below 21 cents. RMS is another one which people were asking about, and it's also, so this is kind of a last leg up, but probably a little bit more where the greed faction cuts in. RMS, when we look on the weekly and monthly chart, on the weekly charts first, we see 1, 2, basically 1, 2, 1, 2, 1, 2, 3, 4, 4, 5, mess. So for a push higher, but it will be kind of out of the next leg up is where you want to be getting out of RMS, or if it busts 40 cents. Okay, 9:30. I thank you very much for attending, and sorry I dragged you away from your loved ones for an extra half hour. And talk to you soon. Have a good one. Over and out. Thanks. Hey, Louise. See ya. See you, Leon, Abby, Patrick, Cindy, and Kay, your husband. See you later, everybody. Have fun. Bye-bye.